Alright, guys, so at this point, it's getting absolutely ridiculous. We have really reached a new point, a new dangerous point in geopolitics and the global economy. There seems to be no more red lines now, zero, and everything is fair game. A month ago, the G7 officially seized Russian reserves. Many people were outraged, but they got away with it. It was the highest of the century, $300 billion can effectively disappear. Now, you would think that they would stop at this, but nope, things are escalating once again. NATO is thinking of doing something far worse. They are talking about seizing or reclaiming Chinese assets on Western soil. And this is absolutely shocking. NATO officials want to reclaim Chinese infrastructure projects in the EU. And the justification is crazy. Just listen to this. The West is afraid of China using the infrastructure it owns to provide assistance to Russia. And this might be a preemptive strike against China in advance of a potential conflict. And you can hear the panic coming straight from Stoltenberg himself.
China is fueling the largest armed conflict in Europe since World War II.
Seizing Russian assets is one thing, but going after China is like dropping a financial nuclear bomb. If NATO really wanted to guarantee decoupling, these would most certainly do it. An EU paper outlined China's investments in European ports. As part of Beijing's BRI program, they have invested a ton of money into EU ports amongst other infrastructure, and this includes Greece, Germany, Spain, and Italy. China bought into the ports to secure their supply chains in Europe. After all, trade between these two economies is extremely big, well over $800 billion. In 2019, the EU declared China as an economic competitor. They were never very happy with the Chinese buying big stakes in their own infrastructure. So it was just a matter of time before they took action, and the Russia China threat really gives them the perfect excuse to do so. However, this opens up a bigger problem, especially for the EU. By reclaiming these assets, you'll be forcing China out of the EU forever. The only visible outcome is a total exit of Chinese investments on European soil. Over the past 8 years, China has been reducing their investments into Europe, but there's still a ton of assets still stuck there. Now, this chart shows us the allocation of Chinese money spread across the EU. In Eastern Europe, China has billions in Poland, Romania, and Finland, and these countries either share a border with Russia or Ukraine. So, any Chinese infrastructure there could be targeted. However, it could also start a dangerous domino effect. There's around $33 billion of investment in Germany and $22 billion in France. Are all those going to be seized as well? Will Chinese companies lose everything in Europe? And this is something that we really need to talk about. Consider China's position. Europe wants your products out of their economy, and that's why the EV tariffs event existed in the first place. And now there's a risk of asset seizures using Russian assistance as the pretext. It's getting harder and harder to do business with the West, and very soon it'll be quite silly to invest in the West as well. What this will spark is an epic exodus, an epic wave of Chinese companies to invest in the global south or simply head back home. Which are the better options both financially and on national security grounds as well? It's important to remember China is a vast country. While high-tech manufacturing is concentrated on the East Coast, Western China is becoming a new hub for companies to flock towards. And here's an article from the journal that tells us the game plan of companies in the years ahead. The future of manufacturing is moving from places like Shanghai to Western China, where costs are just so much cheaper. Places like Guangxi, Hainan, and Xinjiang have affordable labor while still being plugged into the country's superior supply chain. Each of these provinces and cities have specialized industries, which further drives down costs even further. Xinjiang, for example, is a manufacturing hub for solar panels and chemicals. Wages there are lower than in places like Shanghai or Shenzhen, obviously, which makes it affordable for companies to set up shop there. It's no surprise that manufacturing within inland China is booming. Exports from the region have nearly doubled in 5 years, and they've exceeded other export countries like India, Vietnam, and Mexico. The next China is still within China. Manufacturing and industries used to be just a math equation. Is it cheaper to manufacture in Europe without the tariffs? You set up a factory there, you spend billions of dollars. Is it really worth it? Or is it better to make stuff at home while consumers there pay the import taxes? And now that asset seizure is a serious risk, this is simply going to push Chinese companies to double down locally. NATO or the EU going after your factories could cripple or even destroy your entire company. If it is a for sale, you'll be selling assets at fire sale prices. Who really wants that? And if it's an outright seizure, you might lose everything. This will only grow Western China's industries and deprive Europe of further investment for Beijing. Even foreign money is already flowing into the region. 12 foreign investment projects worth 27 billion yuan flowed into Western China, including money from Spain and Japan. China's new growth engine is in China itself. They don't really need the West to grow their industries. Conversely, it's the West that needs Chinese supply chains, expertise, and the entire ecosystem in general to compete globally. All Beijing needs to do is to starve them out, to bring investments back home where there's zero counterparty risk, but still a lot of chances to make money. We cannot understate how seedy this threat is. Just thinking of seizing Chinese assets will trigger an epic flight of investments away from the US and the EU. Now, when the mainstream media talks about the Chinese, about China, they always focus on the property collapse, how housing prices are falling, and why China will fall tomorrow or maybe in the next hour or so. But they fail to see the bigger picture. By 2026, China's tech sector, including EVs, will hit 23% of national GDP. The hole left by real estate will be filled with productive industries. Now, we are talking about factories making cars, solar panels, microchips, and more. And these factories won't be built in the EU or the US. They will be in either Western China or the global south. Trust is now totally gone. Pulling industries away from the West is just one strategy China could do. And let's recall what happened when the G7 threatened Russia's sovereign assets. Let's take a time machine back a few months, weeks, and even months ago, maybe even a year back. Before the confiscation, Russia started seizing Western money. Putin started taking back farmland, he sold off Western companies to Russian interests, assets of EU banks were also seized. Now, we're not saying that China is going to do this, but there's still that option and it is written into law now. In 2021, China passed a bill that allows them to seize assets. If the US or NATO takes action on Chinese assets, Beijing can retaliate in kind. Now, this is absolutely frightening. And a big shout out to our sponsor today, Indigo Precious Metals. When it comes to buying gold and silver, I trust Indigo Precious Metals in Singapore. They have made investing in precious metals safe, fast, easy, and simple for both small and large scale buying. I've been stacking gold for over a decade now, and I've learned two things when buying. You want to buy authentic gold bullion, and you want to buy it at the lowest premium possible to stretch your dollars even further. And I'm glad to say I found both of this at Indigo Precious Metals. There's a lot of uncertainty in the world today. We have geopolitical chaos and the values of fiat currencies getting debased. Inflation is not gonna end, and that's why I consistently buy gold to preserve my wealth. Indigo Precious Metals is a leading retailer in Singapore. They specialize in physical gold, silver, and platinum. They are my one-stop shop when it comes to buying bullion. Their prices are sharp, and they have the best brands on sale, and I can test the gold on the spot. So if you're looking to make your first gold purchase, Indigo Precious Metals is the best place to start. Whether it's 1 ounce or 1 kilo, this is the reputable dealer you are looking for. So take action today. Click on the link below and enjoy a discount on your first purchase with the code SeanFu. Start your gold stacking journey today. NATO is poking the panda, they're provoking the dragon, and there's no telling how far this can go. The law gives China a ton of power dealing with foreign entities on Chinese soil. At the peak, the West had around $300 billion in assets stuck in Russia, but in China's case, it's easily trillions, so the blowback would be legendary. China can seize or freeze all types of assets, movable or immovable, and that means factories built in China could get taken away as a last resort. Now, the second part is downright terrifying, at least for Western companies. China could prohibit transactions with domestic organizations and individuals. And that means stopping people or companies from buying from or even selling to Western companies. Even brands physically in China itself could get targeted. And I think we can all visualize the domino effects here. That means products and goods from Western companies in China could be blocked, and the repercussions are extremely severe. So if you thought Russia seizing Western assets was bad, China doing the same will shock the US and the EU on a whole different level. We are on the brink of financial escalation. NATO is really acting out of irrational fear. The fight against Russia isn't going well, it's quite obvious now, and the only strategy they have left is to target Russia's biggest trading partner.
And for both North America and Europe, if we start to be divided, and especially in a world where we are afraid of not only Russia, but also the security consequences of China for our security. As I said, of course, NATO is good for European security, but NATO is also very good for US security. The United States is big, but it's not that big. It's 25% of world GDP. If you add all NATO allies, we are 50%, twice as big. That matters.
You can tell Stoltenberg is begging the US to stay involved in NATO, and if Trump gets in and after what happened last week, he'll probably get in. NATO could be finished. So the strategy now is to hype up the China threat. But this is a very poor strategy because it's not just factories that will leave the West, Chinese money will do the same. They have seen what has happened to Russia, and this fresh NATO threat is another reminder to get out of Dodge. We've all seen this chart before, probably 100 times now. It shows the Chinese central bank dumping their holdings of US Treasury and agency bonds. They sold over $53 billion in the first quarter, and they are taking their money and investing elsewhere. Obviously, they are buying gold and they are building supply chains in the BRICS countries. According to the Treasury data, China has less than 800 billion in US bonds outstanding, but the true exposure of Chinese assets in the West is much bigger. It's trillions of dollars. The scale is truly unprecedented. Imagine the movement of wealth away from the West, heading back to China, and this will crash bond markets and the stock markets in a hurry. The wealth will have to flow somewhere else. Gold is an obvious outlet, but so is investments into the global south and Russia. China can starve the West out of capital and force them to borrow more from their own people. And when it comes to retaliation, this is where things truly get bonkers. The Atlantic Council war game of financial confrontation with China. More than $1 trillion of Western capital is sunk into Chinese stocks and bonds, and these could be effectively frozen. And just like how the West immobilized the Russian assets, Beijing could do the same as well. Chinese companies also owe foreigners $2.7 trillion worth of external debt. If things get threatened to the extreme, it's not impossible for Beijing to simply default on their obligations to the West. We won't pay you, we'll simply default on our debt. Western investors, Wall Street, and even pension funds could lose everything. Now, I don't think the West wants to find out the hard way. NATO's economy is so financialized, hyper financialized, that a Chinese confiscation or default could take down the entire system. It would be horrible. Do I think NATO will seize China's assets? At this point, anything is truly possible. The longer the war drags on, the more desperate the alliance will get, and China is the perfect punching bag. It's vital to know that everyone will suffer, and this will most definitely break the global economy. China has around $3.4 trillion at risk of possible sanctions. They definitely have more in the system, but this is just the amount the West can easily seize. But the repercussions will be even worse for NATO. Western companies and countries have nearly $6 trillion worth of assets in China, and those can be confiscated and defaulted on as well. If there's one clear scenario of a financial Armageddon, this is it. Industries between the West and China will decouple. If seizing the Russian assets was the Rubicon, trying to seize China's assets is basically walking up the path towards an active volcano and jumping in. It's really bewildering to see in real time the missteps the collective West is making and how it will only torpedo their own economies. NATO countries losing Chinese investments, technology, and capital will hurt them even more. Beijing will also restrict critical imports like rare earths and shift all consumption to local brands as well, boost up their own domestic consumption. As with other sanctions we have seen over the years, from Russian oil to semiconductor chips, this will just backfire. It will only magnify the damage by 100 or 1,000 times more. But let me know what you think. Will NATO really go after Chinese assets and will they cross the final red line? Let me know in the comments below. Stay safe, be sure to smash the like button and subscribe as we navigate through these insane times.